Hey guys, welcome to another video brought to you by Total Control Traders. Today, what a crazy bounce. Congrats, tech bulls. Today we saw the biggest move ever since November 4th. Now, as mentioned before, because NAS is the one that's been driving the market up as well as driving the market down on this most recent consolidation, we are going to start with NAS. Today's bounce was 4.39%. Now, if you were to compare anything before, the whole move-wise, including the wick, the closest that comes to was February 1st, 4.26%. And then the one that actually outweighs it was on November 4th, the beginning of this whole bull move. That second day of that beginning, 5.45%. So today has been the biggest bull run since the beginning of this bull trend, until a recent bear trend, of course. However, now let's get into a little bit detail of where I think the market would go from here. Now, just for those of you that do Twitter, and I'm not a social media type of guy, type of person. Don't have Facebook, don't have Instagram or Twitter. So Instagram was actually just started like a few weeks ago. Tried it out, not really a fan of it. Don't really like all the hashtags that's required to get exposure. So I like things simple, and that's why so far there is only a YouTube. I'm like old school like that, I guess. Only a YouTube channel, and Instagram, it's sort of been put on the side burner for now. But I decided to try it out. I decided to try out Twitter, because from what I've seen on Twitter, I guess the main problem I had with Instagram is you can't really share things from computer, or you can, but it's not exactly convenient or easy. So decided to give Twitter a try. First Twitter account ever. And if you like the contents I share on YouTube, or if you want, just like a constant update, I just posted the first post on Twitter, or I guess the lingo is I just posted my first tweet. Yeah, that sounds right. First tweet on the only Twitter account ever had. This is created like a day or two ago. So it's under the account is under @ TC Traders _ I think that's how it works. If you search Twitter _ TC Traders _ you should be able to find me. But let's find out. Let me know if you can't find me. Let me know if you can find me. Actually, want to know how this thing works. It seems like it's something that's that could be beneficial to the general public, as well as just getting information across. Anyway, so first tweet ever sent was about today. The seems fitting for a first share on today, on the biggest bounce ever since November 4th. Anyways, so that's enough about that. Oh, the other thing I wanted to do is it's been a while since I've thanked you guys for your support, and I want to make sure that I'm very grateful. You guys understand that I'm very grateful that for all your support, all your subscribers. We are seeing a consistent increase in subscribers for the last little while, and our views are reaching 5,000, and this is I mean, it's not anything big, but it's after 2 months, we're at over 100 subscribers. We are at near that 5,000 views. So thank you very much for all your support. All right, without any further delay, you guys are not here to hear me rant about what's going on, but you're here to see what's going on in the market. So let's take a look. Biggest bounce since November 4th. What does that mean? Honestly, when I look at the chart, when I look at the volume, doesn't mean a whole lot to me, to be honest. Volume today, the biggest bounce since November 4th, but just compare the volume from today to November 4th. It's right about that halfway mark. Does it justify the move? When I look at it, no, not really. This could very easily come down. Now, there's a couple scenarios, of course. There's always two sides to the coin, or more sides to the coin when it comes to stock market. In this case, I'm looking at it as two sides to the coin. First, we're just out of sellers. We're completely running out of sellers, and that's why even without any bear volume or even low bull volume, that's why the market, or NAS specifically, is getting pushed up so easily on such big price action with this kind of low volume. Second, fake out. This could very well be a bull trap. Okay, so for those of you that have been following my videos, you would know that generally I look at three things. You want all three to confirm in order to obtain full bull confidence, and I've said that a few times already before. Full bull confidence means 30-minute trend reversal, which we have gotten. You can see higher low, higher high, higher low, higher high, and just continues. The second is the hourly trend reversal, and we have gotten it by making a higher high after higher low. This one is not, well, you could call it higher low. And then the third is the 4-hour bull or trend reversal, which we have now likely obtained from this higher high on the 4-hour. Even if we're to come back down, we're looking at most likely a higher low. But now here's the but. Look at the daily. The volume is not there. And where did we stall? We stalled on this 2003 trend line. I should probably put a subtitle here. Remember, there's three 2003 trend lines. This upper one, this more aggressive one, this being the pandemic trend line. So first of all, we are still trading under the pandemic trend line, meaning momentum is not there. We close just ever so slightly over that 88, and volume is not there. Closing right under that 2003 trend line, where we can see rejection, support, multiple supports, and we are having trouble right there. So coming into Monday, coming into Tuesday, I said this week will likely be the determination week of where the market wants to go going forward. Now, this bounce, of course, is of a surprise, especially based on the volume, but it was anticipated. For those of you that watched the previous 2 days video, we were anticipating somewhat of a bounce. Of course, there were other scenarios that we discussed yesterday's video that there is likely, potential for a further downtrend based on the pandemic theory. And if it does happen, further downtrend, I would anticipate a bounce at the 1-to-1 extension. Never got there. I did swing bulls, quite a decent, I say about half sizing, decent half sizing bull positions from yesterday, because I was anticipating, if you look at the closer time frames, this was essentially a higher low. Even though we did see decent bear action towards the end of the day, it was towards a higher low. And I was comfortable with half sizing, because even if we were to come down to the 1-to-1 extension, I would anticipate a bounce from here. That's where I'll be utilizing the other half sizing. But you know what? It happened to be the other way, where we just complete reverse, which ended up being pretty well, because most of my positions I exited today, most of my bull positions exited today on profit. Now I am actually in a bear position. When it comes to trading, always anticipate the opposite of what the herd mentality is. The general public would probably think, you know, if you were to read the news today, you probably see, oh, bulls coming back, you know, the biggest bounce or the biggest move on NAS ever seen since whenever, you know, whatever. I don't read the news anymore since trading, but something like that. So those are all subjective, but you got to look into details. The details, the devil is within the details, right? So the detail is the volume, the detail is the RSI, the divergences. I'm not seeing a daily bull divergence on NAS. So what's the reason, what's the cause for this move? I'm not seeing the volume either. I don't know. What is the cause for this move? The only thing I can think of is potential bull trap. From here, for people who went bull towards the end of the day, they're likely to be trapped. Or even for people who went bull, you know, halfway through the day, likely to be trapped. The best bull scenario from here that I can see based on the volume is a pullback, because pullback to the GP of this whole move since the low of this touch on the key zone to the GP before a reversal into the higher highs. That is the best case bull scenario that I can see personally, as the way the chart stands right now. Bearish, not always have both sides of the coin ready. Bull thesis, bear thesis. What is the bear thesis? Bear thesis, let's say there's a couple actually. There's a few. Let's say where I moved my drawing tools around. Here we go. Okay, so first, tomorrow we come up to this trend line before a huge rejection, because essentially on the daily this is still a lower high before a huge rejection into the one-to-one extension. That is one scenario. Okay, and that didn't want to work. Let's go here to here before a bounce. So that's one scenario. The other scenario is from here, today we just straight rejection from the 2003 trend line into here before the bounce. Okay, so that's second scenario. Third bearish thesis, because of how close this low is to the one-to-one extension, there is a chance that now this thesis is going to apply to in both scenarios. Well, we could come up to this upper trend line, but regardless, we could just break straight through this one-to-one extension into the next key support. Would be, you can see resistance, support before breaking down, and then support. So somewhere along here, 11,584 before the bounce. So depending on how fast we break down, we could see a meet of the lower trend line before a bounce to this key zone. So there are still a lot more bear thesis, a lot stronger bear thesis comparing to bull thesis. Keep that in mind if you're looking at bull entries. Okay, the only thing that I can't emphasize anymore, remember this, based on yesterday's video, this is the pandemic projection, which is somewhat close to the key support resistance area. I don't like where this projection is based on the 50% move of the pandemic. I don't like it just because there is I don't see any key support resistance around this area. Because after this 11,584, the next one down that's noticeable to me is around this, was it here? One sec. Yeah, the Biden line, 11,000-ish. Then the one below that, the worst case scenario, we would be looking at the GP of this whole move since pandemic, which we can see somewhat lines up before the breakout fake out of the pandemic, and we see support here as well into the 4 digits. Worst case scenario. So keep that in mind. Bear theses are still strong, even though we got the triple confirmation for bull confidence. Volume is not there to back it up. So it's a little bit different story than the general bounce that we have seen. Keep an eye on tomorrow's action. This week, we should see confirmation of which direction the market wants to go. All All right, so that's it for NAS. Let's go on to SPX. So SPX, oh nice, we actually touched it. Oh no, I redrew it. All right, so let's see. No, 4 hour works better. So on this trend line, what we drew before was right about here. Okay, yeah, that still works. So, well, I think the first time we drew as wick to wick, we didn't touch, so then wick to body, and because now we are rejecting from it, tomorrow if we see follow through on rejection, you can move this to the most recent. Remember, you always want to use the most recent touch as a trend line to better project that the potential of the next touch. So right now, the way this chart stands, it is very clear on the 4 hours. This is a descending megaphone on SPX. Okay, the upper side, where before we topped out, the low before the bounce, rejection, the low, rejection. This formed the inner trend line, and then the low again before the bounce, and this bounce has been strong, and we are seeing a rejection again on this megaphone upper trend line. This inner trend line is potentially now invalidated, so there is a chance that what's going to happen from here is we backtest, depending on how fast we backtest it. Ideally, you want to see a backtest right where the confluence zone is. So this is a triple confluence from the pandemic trend line to the inner trend line to the key zone. So this is a triple confluence zone. Let's see how the fib works out. So we haven't looked at the fib for a while. This one doesn't apply anymore. Judging by the move, judging by where we are rejecting from, there is a high chance of revisiting this GP from the low to the high of today's rejection, temporary rejection, let's say, because we don't know what's going to happen tomorrow yet. There is a chance of us revisiting this GP, which we can see lines up with the key zone of previous rejection, support, another support here. Didn't quite get there. Another rejection here before the breakout. And then another support here. 2 supports here. So there's a chance that we can revisit the GP, which is still would be bullish. As long as you see reversal from the GP, that is bullish. If you go past the GP, likely you're going to form a lower high. The chances are you're going to form a lower high from there before the next leg down. Based on the megaphone pattern, it makes sense we're going to be rejecting from where we are rejecting from today. Now the key is on the 4 hour chart. On the 4 hours, you can't really call these higher lows, okay? Because it is one smooth move. In order for you to call higher low, you need some clear, visible higher lows, higher highs like this, okay? So the same idea as if you you can't call these right here a 4 hour lower high, because these are already lower highs. On the 4 hour, it was still in a downtrend before this clear lower high. Okay, so right now, this 4 hours needs a higher low. And would it make sense? Even if we were to pull back to the 0.5, that makes very clear sense of where the higher low could be, because you can see previous supports right around that area. So if we were to, I don't want to draw too many zones because it sort of just starts being confusing. This one does still apply because we see a clear rejection here, clear pullback, and then you can probably draw this zone a little bit higher, or it could just be a breakout fake out, but it does line up with this right here. So if I were to edit this zone, I would edit it to right here if you wanted to. I still like how it worked from here. Anyways, so for here, I would just try to draw a key support instead. And this would somewhat make sense. It's not as strong, but you know, you can see rejection here, breakout, fake out, break over, came close to support, and then dip getting bought up right away, and then breakout, fake out, and then multiple supports here, support before another breakdown, fake out, and then another support before the dip buying. So this 38.20 could be a price to watch for, but it's not that strong. All right, so SPX, let's see if there's follow through on the bears tomorrow. This would line up with the theory of bulls not being strong on the daily on NAS. It's not strong on the SPX on the daily either. SPX is actually very clear that there is going to be rejection from this upper trend line. Low bull volume, likely to see follow through on bear action tomorrow. Dow, now this further confirms that we're likely to see bear action tomorrow. Dow's today, even though it's low bear volume, chopstick top, reversal pattern, chopstick top on the new highs. Is this double top? Off by $1. Off by $1 on 32,000. I would call that a double top. So on the double top, likely to see reversal from here. Chopstick, double top, chopstick top. Likely to see reversal from here. At the very minimal, watch for reaction at the daily 8. All right, that's it for the market. Let's check US dollar first. Didn't pull back a whole lot. Would anticipate a bull flag to form from here before the next leg up, meaning the market would likely be bearish from here. All right, that's it for the market. First one of the hottest tickers, Bitcoin. A little bit of further continuation today. This today or tomorrow. It always gets confusing because of time. All right, so this is today. Decent bull confirmation today on close near the high of the day on increasing bull volume. Now, if we were to come up to make a new high, there will be a daily bear divergence. This last one was a weekly bear divergence. So if we were to form another daily bear divergence from here, likely to see further bear action. But I don't anticipate a break of this high, to be honest. Want to see that bull flag. On the monthly, we are still extended, getting very extended again. So on low bull volume too. It's already nearly a third of the way through the month, and we are not seeing a third of the bull volume. So it makes sense that we're going to be seeing further down action on Bitcoin. Next, Tesla. What a crazy bounce on Tesla. Congrats, Tesla bulls. All right, we played comments yesterday. I said I would hold a core position. I don't know what happened. It's the whole market. I just didn't trust it. Took profits. Hey, still profits. So the name of the game is to make money. So Tesla bulls, congratulations. This was a 20% move, closing at 19.64%. Call that 20%. You know, prom closing right on the GP with a tiny wick on top. We did close near the high of day. Anticipation would be for a gap up. However, a lot of people are anticipating that bull volume is actually fairly decent comparing to the indices. Yeah, bull volume is actually pretty decent, but closing right at the GP and with the way the market looks, would anticipate some bearish action from here. Hourly extended from that hourly 8. It's just been, I think it was a 5 minute. Yeah, it was just a 5 minute algo all day until noon. Now this is noon Mountain Standard Time, so it's technically 2 o'clock trading time. From here, we saw trading sideways action towards the end of the day with forming a 30-minute bull flag. A lot of people are going to be bullish on Tesla. Big move followed by a bull flag, likely to gap up tomorrow, but based on the market, I have my doubts. Decided to actually swing a yellow 650 put. Let's see what happens tomorrow. Anticipating this is a uncertain market. Well, Tesla is actually fairly bullish, but in an uncertain market, even though we closed over the 88, we are still in that key zone and we closed right on the GP. I would anticipate a little bit of a downside. We ran too fast. Even though this is, so technically this is just a bounce. If you look at it on the medium time frames, I don't see any bull divergences. Even the 4 hour, there's no bull divergence. There's nothing that really justifies. See, even on this new low on the 30-minute, there is no bull divergence. So nothing really justifies this move, aside from the volume being decent. But nothing justifies this big of a 20% move. So I have my doubts. Let's see what happens tomorrow. It could be a crazy thing, and that's why it's a YOLO put. And that's it for Tesla. Next one is PTON. Now this is, as mentioned on Monday. Yeah, Monday. Yeah, this is now my biggest play for now. PTON, there's no clear pattern. That's the only problem I have, but I do like where it's bouncing from. This lower key zone, there's GP is right down below from this whole move. Yeah, this whole move. So GP is down below, which would line up with another key zone. So let's say, come on. Now, as you're looking at me drawing this, you're probably thinking I'm just looking at, the things I want to see. Yes, essentially, when it comes to trading, a lot of people are just going to be looking at things they want to see. But that's when you use your drawing skills. Your drawing skills to find out if it lines up with anything. There's not really any zones in here that I can see. Now this is a big zone. I generally don't like drawing a big zone. You could also do this. There. That works a lot better. The reason why I don't like drawing a big range of zones, then basically you're just calling it everything, oh, it's going to be here, it's going to be here, kind of thing. So I like drawing more narrow zones to narrow down where the price action, the most ideal entries would be. So with this previous zone, you can see rejection, another resistance, bouncing from the trend line, finally breaking over, and then a back test. So this makes sense to me, and also lines up with GP. So if where we're bouncing from, this key zone, if this were to be lost, we will be looking down at the 70 zone. Now that's gonna be scary for bulls, but that is gonna be great opportunities for bulls as well. So with today, we are seeing a nice bounce. I can't remember where we bought from. I know it was not near the key zone because I did miss it. Somewhere around here. Hundreds. A little bit above 100. Somewhere around there. So we are seeing decent move. Would anticipate, given the market is sideways or somewhat bullish, which we are not anticipating. But relative strength, if the market were to go sideways, I would anticipate further upside into one of these two trend lines lining up with that key zone up ahead. And again, I don't like this key zone either. It might actually make more sense to go Yeah, okay, this might make more sense. Blasted right through, support, support, went down, rejection, gap down, blasted right through again. Did I move something? Yes, I did. And support again, double support, breakdown, fake out, rejection right on the top of the zone. So this zone makes sense. Let's see what the reaction is when we touch it, if we touch it tomorrow. All right, next one. Looks I'm back to the old habit of spending too much time on each ticker. PLTR. Closing right on top of the 88. There is no bull confidence yet. There is decent bull volume that's coming in today. We're going to need to see that follow through tomorrow. But given where the market is at, likely to see further price action downwards. But let's see what tomorrow brings. First sign. Now I'm fully out of PLTR for now, even though these two bull volume does indicate further price action upwards. I want to see that break of the 88 first. So 88 is your guide. Next, XOM. Coming back down into the channel, so that's a red flag because we did just break over and back test it, and then now we are coming down back into the channel. Breakout, fake out potential, 1-to-1 extension, or 1 to, yeah, that's right, 1 to 1.618 extension, just over it, and now we're likely to see, would anticipate lower prices. It's gonna dependent on oil. It's gonna be dependent on oil. So depending on how fast we come back, we could see a bounce from the 0.382. That will be extremely strong. Next is W. Don't think there's too much, not too much happened today. Spinning candlestick or doji, nearly a doji candlestick, decreasing bull volume. Gonna have to see some follow through. There is a potential of a wedge forming. There is relative strength in this ticker, and we are playing it for the monthly bull flag. So now there is a potential of this forming. You could even say no, we didn't touch it. So it's a wedge within the wedge potential. Let's see what happens tomorrow. Regardless of whether you're bull or bearish, we ideally want to see a touch before the rejection at this trend line. Then that would confirm this wedge, this inner wedge. That would make an easy entry right on the revisit. If you do see rejection, right on the revisit of this inner lower trend line. All right, that's it for the hottest tickers. Let's move on to the requested tickers. First one, FSR, Rafaela's favorite. You love the volatility of this stock, eh? So on FSR, not ready for a position yet. Even though there is lack of bear volume, we do see consistent, including today. Today, what you wanted to see was somewhere around there. That kind of bear volume, consistent with previous low bear volumes before the pop. However, we did see an increased bear volume and rejection at that key price of 23.63. Now this is 1, 2, 3, 4, 5 rejections. 23.63, very notable price, very notable resistance. The previous high, huge rejection from it. Now we are seeing 4 more recently. So from here, tomorrow, we're going to want to see, ideally, decreasing. Once you see the bear volume right around here, right around here on the daily, that is an ideal entry. Of course, it's going to be a little bit dependent on where the chart is at. But strictly speaking from a volume standpoint, you're going to want to see bear volume right around here. Half of today. Okay, next one. Apple, relatively weak, rejected from a 88, low bull volume, still trading on the daily 8. This is not a clear daily lower high, meaning this trend could be not done yet. As in, we're going to continue coming down. Remember, ideal entry, easy stop entry would be right around that 113.90 with the key support resistance right below it, 113. I want to see 113.80. Oh no, 1 to 1.618 extension right below at 113.80. So 113.80 is actually the most ideal entry. You just put a stop right below it. If you want to be a little bit more safer longer term, then you can put a stop right below 112.59. But there should be an ideal play coming up considering the trend is still bearish. Next, Disney. Now, a lot of this tickers we're going to cover. Make sure you, if you're playing bull, watch for whether if they're trading over the daily 8. The daily 8 is key. If they are, relative strength. Market is SPX. SPX is trading over daily 8. No, NAS is not. SPX is. Dow is. So watch for trading, especially if you're playing tech names. Watch whether if they are over the daily 8, and that means there's relative strength versus NAS. Or else try to trade stocks that are not on NAS. Disney. I think there's multiple people that requested Disney today. So this was from, I think, their announcement of, I want to say Disney Plus, something related to that. Big gap up, continue to run, back down. Did not back test the channel, the upper trend line of the previous channel yet. And then we just continue to run. So from here, there is a trend line forming. No, there's actually a rising wedge forming. Not a clear rising wedge. Somewhere along that area. Potentially more like this. So there is a rising wedge somewhere along that line that's forming. 2 touches on the upper trend line so far, 2 touches on the lower trend line so far. Actually, 3 touches on the upper trend line. So 2 touches on the lower trend line. And based on the price action, the volume that's coming in after a decent bull volume, I would anticipate another, at very minimal, another touch on the lower trend line, which would it? So depending if it takes a day or 2, maybe 3, it could line up with the GP of the last move. But overall, Disney, it's a slow mover, so it's not really one of my favorites. I tried playing it before. It doesn't move that ideally, unless you get something like this. It's gonna be hard to play it for decent return wise. So with Disney, would anticipate at least a 3rd touch on the lower trend line. It is a rising wedge, meaning that there could be a reversal coming for bearish action. Versus the market has actually been relatively strong, because market has been pulling back for 3 weeks, but Disney has not. So we broke over the previous resistance. Now there is a key zone that's formed. Come on. Okay. Right, so now there's a key zone that's formed. You see multiple rejections here. Now 1 support so far. Would anticipate a little bit more downward price action. Next, APHA. So today's move was an increasing bull volume. Now let's take a look at, because I was looking at this intraday. 830 had a bigger bull volume than 730, which is what you want to see. So it just sort of slowly grinded up on the 15 minute 8 touch, grind up, almost touch, grind up, break down below, immediately bought up, and then now we are trading over the key zone. However, for some reason, let's see if these reasons are valid. There is a bear divergence forming on the 15th, and just because, I think it's just because of the channel. And by the time I was looking at it earlier today, it was in the middle of the channel, so didn't really want to play bullish on it. It did grind up. Commons would have been okay, but now if we were to make new highs tomorrow, there's going to be a daily bear divergence. So let's say we touch the upper trend line of the channel tomorrow, you will see a daily bear divergence that's going to look like something like that. So be careful if you're playing APHA. I don't think the marijuana sector consolidation is done. Remember, we did run for 204 days on 400%, and now so far we have only pulled back 50% of it. Ideally, what I want to see is a revisit. Let's see if we can find a key zone here. Pretty sure there's gonna be. Okay, I like it here. There's one breakdown, fake out, rejections here. Let's get rid of the channel. That might be a better way to draw this. It should be right there. Ah, that makes sense. So we didn't touch the key zone yet. Off slightly by 8 cents. So if we're to make a new high tomorrow, bear divergence, upper trend line of the channel would anticipate further price downward price action. Potentially revisit this lower trend line again for the 4th time. We might just come to the key zone and start bouncing from there. But that would be the ideal entry around this 1370s mark. Next, CNR. All right, really gotta speed this up. Only gone through 10 tickers, 40 minutes already. All right, CNR. Yeah, so as covered in yesterday's video, if you see a rejection, a potential rejection from this upper trend line would anticipate further price down action, and we are seeing that on decent bear volume. So as you can see from previous two, there were decent bull volume pops too, but they rejected or they stalled around that upper trend line of the channel, followed by decent downward pressure. Same with this one, similar to this one, but there was no bull volume pop, but there's a potential for this one as well. So right now, not too interested in CNR. Let's see what next day, tomorrow, and the day after brings. Would anticipate potentially a inside bar tomorrow, bearish inside bar. All right, next is CCIV. Very weak chart. CCIV still cannot even break over the previous wicks. Low bull volume, trading on the daily 8. Wait for that daily 8 to catch up. See what the action looks like. Right now, it's basically just forming a bear flag from here. Next, NEO. Rejection from the daily 8 on so bull volume. Rejection from the daily 8 and in the key zone. There's no clear pattern to be playing here. So let's clean the chart up a little bit. It's been a while since we looked at this chart. Now, one thing you guys can consider doing as if you are new to charting, is whenever you start a new chart, just click the, you can't see it, on the left side, on the bottom of it, there's a trash can. Just delete all drawings and then redraw. I did that for probably a year or so. No, 6 months. Full time. 6 months, deleting all the previous charts. What that will do, a couple things for you is, one, you have a clear chart, a clear mindset going in, and second, you will have basically a canvas for you to re-practice your drawing, see if you can see what you saw before, and that'll not only help you with your drawing as well as practicing to confirm whether if those drawings work, back testing, you know, if they do work. But yeah, give that a try if you guys are relatively newer to charting. So from here, we did bounce from this lower trend line from way back here. We see multiple bounces. One first bounce, second bounce, it nearly touched, call 2.5, third touch, third support, and now the fourth support. However, based on this long-term support with the bounce that we're seeing so far, it is not ideal yet. You're gonna need to see a follow through tomorrow for actual some bull confidence. Now it's okay to be a little bit late, but you don't want to be caught in the wrong side of the traffic. That's it for the requested tickers. Next up are, I'm going to run through some of the top tickers, see if there's anything interesting, and then run through the Wall Street bets. First one, ABNB. Right, Head and Shoulders played out, bounced from the GP, bounced from the key zone, and now we're rejecting under the daily 8. Rejection from yesterday, strong market today, but we are still seeing a red candle on decent bear volume. So exited the position, took the profit today, and want to see further price action to determine where we are going, potentially going from here. But chart is looking a little bit bearish from here. First, that is the first one. The second one is BBBY. Decided to take profits on this one today as well, based on not only the market, but as well as with the price action that's happened today. We gapped up and ran from this previous high resistance that we've rejected 1, 2, including yesterday, basically 3 times. But the run had given back a lot more than ideal. So this huge upper wick on bear volume, that was a red flag, but I was late to exit because I was looking at something else. And then I think I exited right around that $30 mark, because now we are trading under the hourly 8, and on the daily, this is essentially potentially a reversal candle. What do you call it? Is it hangman? The hangman's the other way around. But yeah, reversal candle, decent bear volume. I really need to refreshen my candlestick terminologies, from here, yeah, would anticipate further downward price action. Next is Workhorse. I think we got a pop today. Double rejection, double top. Potential. Still trading under the 88, so it is still relatively weak. There is a bull divergence on the daily. We're going to need to see that follow through tomorrow, disregarding whatever the market does. We're going to need to see the follow through, trading over the 88 for any sort of bull confidence. And it's okay to be late. There's so much upside on most of these tickers. Next, Dash. Wow. What crazy bull volume today. What happened today? Okay. We are moving Dash to the watch list. Huge bull volume today. Very little price action. We did lose the low. The IPO, or we'll call this IPO low. IPO low. But yeah, big price action, or big bull volume. Unable to push it up. Give it a little bit more time. Don't rush into a position. We are trading, or we did just lose the IPO low. And from here, let's see what tomorrow brings. on this kind of volume, you want to see follow through. We're still not even near that 88 yet. And next one, QS, I think is one of the rarer ones. We are trading over the 88. Yep. And increasing bull volume, still very slightly comparing to previous bear volume. Gonna need to see follow through tomorrow. Pull us away from the 88 before a back test on it. QS is relatively strong. Remember, this is potentially an ABCD pattern right here. A being the high, B being the low, and then now this is potential for SC. But there's another way to read it. This is the A, this is the B, and now the C has already been lost. So not as convicted on this play, and that's why I took profits on it today. But let's see what tomorrow brings. All right. I think Beam was a little bit interesting. All right, next one is Beam, and today we're seeing a little bit of follow through from the bounce of I still can't draw this properly, but let's just say this one, because now this is confirmed the low. Did we touch the GP? I still don't like it because we didn't touch the GP, but we are seeing a bounce and we are trading over the 88. So Beam is relatively strong versus some of the other tickers out there. And essentially, is this weekly? If we were to make a new low, we would form a weekly bull divergence. Right now, it's, I don't know if you can call this daily divergence. RSI is slanting down with a huge trend line that we're bouncing from. So potential for a daily divergence. Right, next is AMD. How did AMD do today? Nice. So we did bounce from the key zone, gap up and run. No bull volume, similar to the market. Would anticipate, if anything, touching on the 88 before the rejection. All right, that's it for the top watches. Next ones are up are the Wall Street bets. First one, same as usual. GME. We saw continuation today. Congrats, GME bulls. Remember, projection 504. I didn't play this today just because we are a little bit extended from the 88, but upon the pullback, I would consider playing this again. Options not so ideal anymore because the IV is just crazy jacked. You look at the run so far, it's been 524%. So there's no way the IV is not crazy jacked. Okay, so ideally, what you want to see from here is just a gap up tomorrow if you are in position already. If not, wait for the pullback. We are a little bit extended from the 88, not too far yet. So there, upon the gap up tomorrow, if we were giving the gap up tomorrow, we would anticipate that there's going to be some selling pressure. Think about it. All those people who bought it back up here, right? All those people who bought it up here. Because essentially this was a real body, even though this was a huge wick, this is real body too. So there is gonna be some big selling pressures in between, somewhere along there kind of thing. Would line up with GP too. So huge zone. If we're to gap up tomorrow, let's say best case scenario for the bulls, gap up and run into the GP, definitely selling off. Would not participate in the puts because IV is so jacked. The puts may not even pay that all that well. So keep that in mind if you're thinking of shorting GME. But yeah, closing looks pretty decent, closing near the high of day. Next, AMC. Now, if you haven't watched yesterday's video on AMC, this was an amazing play that I completely forgot. AMC called out yesterday that there is a potential for this being the laggard play of GME. Because if you compare GME, this was yesterday, huge run, breaking over resistance, all sorts of resistance on decent bull volume. But AMC yesterday, did not yet. And today we saw it. Increasing bull volume, breaking over this key resistance right here at 917. And we are seeing nice run. So the problem with it now is earnings is tomorrow. On this, very nice legger play. Congrats for those that took it from yesterday's video on AMC bulls. Completely forgot about it myself today. But yeah, congrats to AMC bulls. Watch out for earnings tomorrow. That might just completely crush the move. Next ones are a couple of new, very, what are they called? A huge increase in Wall Street bet score. Very popular, very trending now. Just a couple of them, we will keep them at the last of it. First one, TV. There's a channel. There's an easy play. Personally, not for me because volatility is not exactly there. Long-term downtrend. Now the trend has finally reversed on both daily as well as weekly. What about monthly? Monthly, not so much yet. We're going to need to form. So on the monthly, this could be a lower high. And we're going to need to hold this lower trend line. But on the daily, easy play. Touch of the lower trend line of the channel. Now you want to see continuation onto the upper trend line of the channel, where we can see 1, 2, 3, 4, 5, 6, 7 rejections so far. But yeah, TV, decent low risk play. Easy stop. Next is most. Not a very liquid stock. It's penny stock. Not something that I would trade personally. But let's look at the weekly instead. Ooh. Okay. Still very illiquid. I'm seeing a rising megaphone pattern. Rising megaphone pattern coming back down to the lower trend line. This could be an easy play on the touch of the trend line, where we can see multiple supports. Even on the open down below, we got bought up. So easy play down here. Touch of the trend line, entry with the stop. I would place it right below this 1.36. For those of you who are interested in penny stocks, let's do free. I think that was, yeah. Okay. Free potential head and shoulders formation. And now the shoulder is, we're going to need another couple more days movement to confirm whether this is shoulders. And earnings could be the cause of the downward trend on the shoulders. Watch for the trend line break to confirm. I would say this would be about the neckline. So this being the left shoulder, right shoulder, left shoulder, head, and the right shoulder. This will likely be the neckline. Upon the break of this trend line, you are likely to see further downward price action. All right. And I think that's long enough for a weekday video. Hope you guys enjoyed the content. Don't forget to give a thumbs up. If you're looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel, where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer a 7-day free trial to our chatting platform, where the people who's been joined or who has joined so far, they love it. Now, don't take my word for it. Maybe reach out to some of them and ask for what their thoughts are. I posted a couple of reviews on the website. If you are ever interested in taking a look, make sure you check it out, totalcontroltraders.com. So what happens in the chatting platform is that we share trade ideas, we share charts, and things are reviewed live during the market. As I place trades, I will be sharing those as well. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.